But amid all the uncertainty, there's a technical trend my next guest is watching that suggests one area of the market could be poised to break out, and that's small caps. For more, let's bring in Katie Stockton. She's managing partner at Fairlead Strategies and a CNBC contributor. Katie, thanks so much for being here. I'd love to sort of just get your take on the general market and where you see things moving, starting with the yields, because that is our big story of the day, if indeed the U.S. government is looking to have to refund some of the tariff money it's collected. What are the charts telling you about the reaction?
Yeah, the yields have been very much range bound. So for us, the takeaway is neutral on the charts, and that goes from an intermediate and a long-term perspective. So the best thing that we can do with yields from our seat as technicians is watch the support and resistance levels that are relevant, and they're actually very close by. So I think after this month's meeting of the Fed, that we will have some clarity as to which way this range is being resolved. On the downside, for the 10-year, we have support around 4.2%. And on the upside for the 10-year also, we have resistance around 4.4%. So those are the two levels that we're watching. A breakout from the range, of course, would suggest higher yields and vice versa. And if you look at history, when you do see rate cutting cycles, you tend to see yields correlated to that. So if that's what unfolds, well, then a breakdown is a bit more likely, and that would put secondary support around 4%.
Neutral seems to make sense with such a narrow range there between 4.2 and 4.4. What about the small caps? You know, we've heard a lot of fundamental analysis about why that group might be winners, but what are the charts telling you?
Well, the Russell 2000 as a proxy for small caps has exhibited very strong upside momentum, both intermediate term and short term, a really big push higher recently. That push higher does look overextended from a short term perspective. But if you can zoom out on the Russell 2000, you'll see what appears to be almost a big cup and handle formation. It looks poised to eventually lift to new highs, and that, of course, would be a positive catalyst. In the meantime, though, we do expect some consolidation aligned with seasonal influences at this time. And it's not based on seasonality that we get there, but rather just looking at the overbought conditions, how widespread they are, how far we've come, and how fast we've gotten here. And now, of course, we have a little bit of a loss of upside momentum for the large cap indices that we think will carry over to the Russell 2000 as well. It's evident in the S&P 500. We're even seeing some technology-related benchmarks take out their 50-day moving averages. So that's enough of an indication that we are in store for more consolidation here this month, and that would be very much fitting with expanding volatility as evidenced in the VIX, which is also above its 50-day moving average as something that's inversely correlated to the S&P 500.
We look a lot, of course, at energy, but most specifically crude oil prices, sort of as a proxy for what's going on in the macroeconomic environment. What do the charts tell you there as a macro read for crude oil?
It's still a secular downtrend for crude oil prices. In order to reverse that downtrend, we'd really need to see a move that's pretty substantial to the upside, just based on where there's resistance. So we're just watching levels, seeing if we're going to see a proper reversal of trend. There are some indications on the monthly chart of WTI to suggest that the low that we saw March, April was a major low, and that just comes from long-term oversold readings and upturns in accordance with that. We are seeing in the equity market on the energy front, we are seeing some signs of life there. If you pull up MLPs, you'll see a little uptick in momentum as some of those lift out of their prolonged consolidation phases. I looked at Phillips 66 at PSX for one this morning. That almost looks like an inverse head and shoulders formation. So we are seeing a bit more constructive technical action, even though the long-term momentum is still to the downside, just as it is for crude oil.